Hello, my name is Vladimir Tikhomirov. I'm Chief Economist at BCS Global Markets, and I'll give you my view on the coming week. The past week, perhaps, there were two major developments that I would like to highlight from the past week. One refers directly to Russia. That's the central bank meeting on Friday. The cut, 100 bips down to 4.5% in the key rate, didn't come as a big surprise. It actually matched the consensus expectations and market expectations. We haven't seen, as a result, any significant reaction in the ruble rate to this news. However, the comments that the central bank gave in its statement and central bank chief Nabiulina voiced in her online conference show that in order to push forward with this cut, the central bank had to significantly adjust its monetary policy principle. What I mean here is that they are now targeting for a real rate, long-term real rate, of just 1% versus 2 to 3% range they had as their principle for the last few years, and that's a major cut in the real rate, and in a sense a major bet on the ability of the central bank to maintain low inflation, or basically the bet that the inflation stays quite low in Russia. At the same time, the central bank did voice a concern that they expect actually inflation in Russia to start picking up in the next few months, not least because of the base factor effect. And more importantly, the central bank did not change their guidance for inflation, year-end inflation this year. It remains at the range of 3.8 to 4%. So basically that means that in order to maintain the current rate, the central bank either has to cut further its real rate target, less than 1%, perhaps their bet might work out and the inflation could eventually be lower than they expect. That would help them to maintain the current rate. Or if inflation actually keeps rising to 4 or above percent, then there is a possibility that the central bank might consider increasing the rate sometime in autumn. So given all these options and uncertainties, I actually believe that there is a big chance that the central bank would make a pause in any rate moves at the next meeting, which is scheduled for late July, and the next meeting after that, that's mid-September. That would be the time when the central bank would have to decide on what moves, if any, they have to do in their monetary policy area. By September, I think there will be a bit more clarity on the situation in Russia and the global economy, oil market including, as well as on the inflation trend. Harvest outlook would be much more clear, and from that we can actually forecast what the inflation trend could be in the remaining months of the year. So at least for the next couple of months, I don't expect the central bank to change the rate. Actually, based on my forecast, I actually don't expect the current rate to change this year at all. I forecast the rate at 4.5%, with inflation running roughly at around 4, perhaps 4.1% by the year end. So we'll see how the situation develops. The next piece of news from last week that would, I think, frame developments in the coming week as well, were concerning news from the coronavirus front. Basically, they have shown that the new outbreaks of infection were recorded in many parts of the world, including countries that before that reported a few days, or in certain cases even a couple of weeks of no cases at all. And that, of course, includes China, but some European countries, Australia, and some key states in the US. All this is very concerning, because basically that means that the pandemic is not coming down. World Health Organization basically says that worldwide we see continued increase in the cases, which means that the big bet that we saw on the markets over the past few weeks, which basically supported the rally in stocks might not work out, i.e. that the pandemic is coming to an end and that we might see in the third quarter a reversal in economic growth trend, sort of V-shaped recovery. All these hopes might not materialize, and that would be a big disappointment for the markets. So that could actually be a trigger for some correction on global markets as well as on Russian market, including actually oil market as well. We have seen oil trading at above $43 per barrel Brent. Ruble accordingly has strengthened to the levels below 69 rubles to the dollar, the level that we didn't see since early days of March. But looking forward, I see sort of more clouds on the horizon building up, particularly from the coronavirus front. So basically, my view is that we can experience increased volatility on the markets, more corrections. Although I won't rule out some continuation in growth. But generally, the coronavirus situation, the macro situation, do not provide grounds for a very strong optimism. So my view is that the volatility is going to continue, perhaps even will become a bit higher in the coming week. Thank you.